Welcome to Momentum Investing, property investing made easy. One of the world's top podcasts on property investing, bringing you the top experts in the field so you can learn firsthand what it takes to create passive income and take control over your financial future.
Hello and welcome to the Momentum Investing Podcast. We have such an exciting episode for you here today, so thank you so much for joining us. Thank you so much for being a listener to the podcast. I really appreciate you taking the time to spend it here with us and learn about property, learn how to grow your portfolio, because that's our mission with the Momentum Investing Podcast, is to give you the tools to grow your portfolio as safely, securely, and of course as quickly as possible. That's why we interview experts from all over the world. We interview property experts. We interview property specialists. So we've had on, lettings agents. We've had estate agents. We've had mortgage brokers. We've had interior designers, project managers, planning consultants, surveyors, sourcing agents. We've also had people with major portfolios come on and teach us how they raise finance. We've had entrepreneurial experts who talked about the equity raises that they do, or how they network, how they find clients, how they review businesses, how they review investments. We've had such an exciting mix. And speakers, everyone from Kim Kiyosaki to Jordan Harbinger to Simon Zucci to Shimon Rudish to Ben Chai, an amazing group of speakers coming on the show. And today, we're actually welcoming back our first ever guest to the Momentum Investing Podcast. Our first ever guest was Matthew Moody. Matthew is a very experienced investor who's doing some amazing things. He's run a letting agency for decades, and he's actually making a very, very exciting play with the letting agency that will change the local market to where he is. So I hope you look forward to hearing that and hearing about it. He also gave us some great insights into what he sees has been happening in the last year since he was on the show last on, in the market, and then what he sees happening going forward. So it was very, very interesting, and you can use a lot of this because he's going to talk about how do you put your assets now? How should you be structuring your portfolio? How should you be thinking as an investor in times like these? So take this opportunity, listen, learn, and grow. Make sure if you're not already subscribed to the podcast, please do so. Please subscribe to the podcast and please tell your friends. Please let them know that this podcast exists and that you enjoy listening to it and that there has value for them as well. I mean, if you're making social media posts to build your brand, please share about the Momentum Investing Podcast. Let people know that you're every week you're educating yourself by listening to some of the top experts in the world. So I really, really appreciate your help. And now, with no further ado, let's get into the interview with Matthew Moody. Welcome to the Momentum Investing Podcast. We're here with our first ever guest we ever had on the Momentum Investing Podcast. My good friend Matthew Moody is back for his second episode. Welcome back, Matthew.
Thanks for having me. How are you doing today, Daniel?
Oh, I'm good. Crazy times. There's so much going on right now, which is obviously super, super exciting. And I'm really excited to talk to you because when last time we spoke, obviously we just started the podcast, but it was also as a kind of our reaction to COVID. We wanted to get more information out there about what was going on in the market. We never expected COVID to a summer later still be going on, but here we are. COVID is still happening, but a lot has changed. This has been a crazy year in the property market. What would you say kind of to the past, I think it's 13 months ago you came on the show. What have you seen has been happening? What do you see is going to happen? And then I want to talk about the things you're working on right now. But what have you seen in the last 13 months?
Absolutely. So it's been, as you say, a tumultuous year. And I think what's been interesting is how the market's reacted to that, because we had this first initial stage of, everyone really not knowing what to do. And, society effectively shutting down in the UK for a good 3 months or so. And then, the first shoots of recovery, so to speak, started coming through. And I think what's always interesting when you look at recovery and what's happening with market is how much it is always driven by sentiment and not logic. So what we saw probably June-ish time onwards is a kind of big resurgence of people coming back into the market from the point of view of both people looking for rental properties and people looking to buy and sell properties. And that had a twofold impact in the sense of, one, there was a slight, I guess, hardening of some of the price points in some areas where prices started to rise, even though you wouldn't really expect that, given that no one had done anything for 2 or 3 months
It's
because of all
nuts.
this
The
pent-up
market
demand.
was stopped.
Yeah.
Financial, like all the financial numbers in the UK, it was like GDP was down by the most ever. It was insane. And the property prices are soaring.
Yeah, so it's kind of, a strange situation, but I think you'd also expect it though, because obviously, from a rental point of view, let's talk about it in 2 stages, rental and sales. From a rental point of view, you had all these people that couldn't move, didn't want to move, were told they couldn't move and just were scared. Then it's all of a sudden, well, okay, we're opening back up again, you're kind of good to go. Which is ironic given the message that's being given now. But anyhow, so then you had lots of people starting to look, and because obviously demand drives, what the supply is in the market, price points started going up slowly, but not that much. I'd say generally speaking in the UK, outside of London and the Southeast, the rents have been pretty flat for a number of years. They've not really gone up that much, a little bit, but not that much. On the sales side, though, was where it was kind of a little bit more interesting, because if you think about it, what do estate agents always do? They lie out their back teeth. My apologies to any estate agents out there, but they just make up a price on the point to get the business. So, you have 3 evaluations, one will come in at 150, one will come at 170, and some bloke will tell us, oh yeah, I can do that for 220. And then normally the people take the highest price point, don't they? So then you've got all these properties coming on the market, which are at a higher price point than you normally expect. But then the crazy thing was, they all started selling. Literally,
people weren't negotiating. They were actually saying yes.
Precisely, and I think we've also seen that with contractors as well, which is another story, and I'm happy to go into more detail on that. But certainly from the rental and sales perspective, I think it's been interesting to see that kind of leap. Now, obviously, the government then announced a stamp duty threshold holiday, basically giving, essentially free money to people that were buying. And that, again, did increase the sales. But, it's not increased by as much as people think. I think we're talking about, 4 or 5 percentage points, not that much, but it has obviously had an increase. Yeah. But the other interesting thing, and, I don't know if you've experienced this, I'm sure you have, is it's hilarious to me that given that pre-COVID we're already in a technological age, that COVID is being used as the excuse for any disruption in service, any, let's call it piss poor service, you'll excuse my expression, and any excuse to just deliver bad service. Oh, it's all down to COVID. Whereas in reality, what it's done is just expose people that literally were bad to begin with, aren't getting any better, and in reality are probably going to be swallowed up by other competitors who have kind of cottoned on to the fact that, people do want things quickly. And that whole kind of, I guess, pivot from, people wanting something, they'd go out to the shops and get it. Well, now they can't do that. It's like, well, what's the fastest company that's going to give me the thing I want the quickest? Well, generally speaking, it's Amazon, right? And all these other companies are just thinking, what the hell am I going to do? And it's been similar, I think, in the property market, in the sense of both suppliers, contractors, solicitors, just trying to, keep on top of demand, but at the same time, put in process systems and processes that most of them, to be frank, don't have.
Yeah. No, we've seen that so many people who come in like, the process is delayed by a month or 2 months or 3 months, and it's all because of COVID. But as you say, the solicitor was probably working from at home before, or, even if they were working at the office, it's the same computer they're using because they just picked it up and they brought it with them home now. Yeah. So technically there shouldn't be much of a delay. I mean, yes, maybe the secretary isn't one desk away, it's on the second screen on Zoom, but technically, no, it shouldn't make a difference. But it is a reason to. If you are being slow, or if you have been chronically slow, Now it's like, no, I'm not chronically slow. It's just because of COVID that I'm slow today.
Yeah, definitely. And I think, the other major impact that I think has been experienced in the market is just essentially a blanket ban on evictions. And, the thing I've kind of come to realize over probably the last 10 or so years of doing active lobbying of government on a variety of measures is anything that any government does, and it's probably the same in Sweden too, is anything that any government does is all designed on how you can get more people to vote for you.
Yeah.
It's got nothing to do with common sense, logic, rational thought, or what's the right thing to do. So having this blanket ban on evictions has essentially meant that some landlords, and I'm particularly talking about, let's say, the kind of more amateur landlords that may only have one property, which, to be frank, is 80% of landlords in the UK. It's not investor groups like you and I are involved in. If someone's not paying the rent, they're literally just subsidising that person to live there for free. And I know there's been a lot of a talk of that in terms of some of the landlord groups trying to lobby against it, but government.
Well, and that's the difficulty too,
yeah,
because that landlord is still paying the interest on their loan. They're paying
absolutely
all the other costs, and then the tenant says, nope, I'm not paying the council tax anymore. Nope, I'm not paying my utilities. I'm not paying my rent. Then you as a landlord are like, well, what do I do now?
Absolutely. And given that, I think, the latest figures I saw, I'm not sure if they've changed, it was something like 5 to 8 million was still on some type of furlough. 51% of the country is employed by government. You kind of think, well, there shouldn't really be that much of a problem, should they? Let's face it. The working population is what, 25 million or so. It shouldn't really be that much of a problem, but I think that's caused a lot of major issues and just been yet another excuse.
Well, I mean, at one point there, 25% of the UK workforce was on furlough. It's down to 9% now, which is obviously a lot more reasonable. And employment is really going well. I read a study from NatWest where they said that the perceived back in March, the expected post furlough kind of unemployment was going to be about 7.6%. That's been now down, well, I don't know, improved, or their new rating is about 5.5%, which is still unemployment, but it's actually pretty good post furlough. So that does bode well for the UK post pandemic, post furlough, post everything, that it'll actually be okay.
Well, it's one way of looking at it, I guess. I'm not sure I agree with the premise it will be okay, but it's I'd take any forecast made by any bank or government with a pinch of salt and laugh at it generally. But I mean, it's interesting that there certainly has been a massive exodus from hospitality industry, which you would expect because of the blanket actually, by the way, you can't do any business anymore. See you later. And I think, what a lot of hospitality venues have experienced, including like pubs, is just complete lack of staff to be able to staff them. So a lot of them have still not opened up. So being shut for 4 or 5 months plus. So that's been an interesting development. Definitely. I think the other thing that's coming as well, which I'm not sure if you guys are also seeing or experiencing, is that the government continue on this stance of, and this is just my opinion, but it is backed up by what's happening in the market and what's being pushed through, is they continue on this stance to essentially try and stamp out the small landlord. And we've now had this whole new, every rental property now needs to have an electrical installation control report done every 5 years, and if you don't have that done, or you don't have one, then that's a £30,000 fine, thank you very much. Which is a completely exorbitant fine for what is essentially an issue that is on a concurrent basis an issue anyhow, but it's also from the point of view of the way it's released is, oh, by the way, it's 31st of March today, and by the way, tomorrow you have to have this done by, thank you very much. And it's this whole kind of blanket kind of provision about trying to get people to do things that actually they're already doing, but then threatening them with fines and, you know, various, you know, regulatory pressures that are put on them. But at the same time, social housing and council housing is exempt from this. So it's kind of, well, it's a good thing to have. Then at the same time, and we've done dozens and dozens of ERCRs with the rental properties that we manage, you know, what we're seeing, and we've seen this again, is actually the regulations that the electricians work to change every single year. And you have to ask yourself and question at some point, well, what is the difference really between an electrical install that was done 5 years ago and one that was done now? Well, all it is more red tape and more bureaucracy. And it's not actually a free market anymore. It's, you know, it's not allowing people to essentially look at, well, if I'm going to improve my property, how do I want to do that? You probably want to do it through things that are eco-friendly in some description. But what are the incentives to do that? Well, actually, there are zero. So a lot of landlords who perhaps would want to try and improve their properties and try and lower their electric bills as well, particularly if they're, say, a HMO landlord, don't really have an incentive to do that because there is literally no incentive. There was this big green scheme that came out last year. I don't know if you saw that announced. It was like a £35 million fund. Well, we tried with multiple landlords, and I also tried myself on a house I own. It was impossible to get hold of any of this money because the people quoting were just quoting double or triple what they'd normally charge. And then you have to send in an application to a government agency who then basically turned it down and said, oh, it's too much money. But there was no guidance anywhere as to, well, how much should all this stuff be? And a lot of it was designed to improve the fabric of structures in the UK, which I'm all for, by the way, you know, heat pumps and solar energy and, you know, biomass systems and stuff to help use things in a more sustainable manner. But the quotations people coming up with were ridiculous. I mean, I heard of one quotation, it was £14,000 to insulate someone's roof.
Well, tough job, right?
Well, yeah, if you can get it.
Well, what do you think we're going to see now going forward? I mean, we're hopefully, you know, we're going to come out of the whole pandemic. Where do you see the market going?
Well, I think it's, you know, as you know, and you speak to lots of people, anything we say is just an opinion and it's a crystal ball gaze. But I do feel that from a high street perspective, the high street is dead. You know, we've had essentially 14 months or so in the UK being conditioned to buy online. Now, I know local, let's call them out of town retail shopping centres near me that are full at the moment. They're packed. There's literally people queuing to get into them because they've not been out for 2 or 3 months. And as we know, you know, we're both big proponents of Tony Robbins. He talks about Maslow's hierarchy of needs, and one of them is variety. And that meets people's need for variety, just going and shopping and looking at nonsense. So a lot of these out of town shopping centres are packed, but the town centres themselves, the high streets, there are shops closed up everywhere. You know, obviously you've not had that kind of hospitality sector dragging people into, you know, and by that including bars, restaurants, cafes. You've not had those open to drag people into the town centre who might then wander off and look at some shops. So I think there's going to be a huge change in just the dynamics of the market in terms of the town centres. And, you know, I think that's somewhat concerning really from the perspective of, well, do you really just want out of town retail shopping centres? And is that really a sustainable model? And then does that not in its sense drive, it's almost like a parody of the UK government's commitment to say becoming net neutral carbon or whatever nonsense they come up with by 2035 or 2050, whatever it is. Because if you develop more out of town retail shopping centres, the only way to get into them is to drive. Whereas if you live in the town centre and you can go to shops in the town centre and cafes and bars and restaurants, then you generally would walk. But it's been so dead. I mean, literally, the main capital cities that you're very familiar with, London and Edinburgh and Birmingham and Manchester, they're just dead. There's no one in them. You walk around, it's like an episode of 28 Days Later. So I am concerned from that perspective in terms of the government have announced plans to allow people to convert offices and commercial into residential. That kind of already existed anyhow, but they've just kind of come out with and just said, do whatever, really. And I think that is going to be problematic. We already saw it in London where you had this kind of moratorium and people were converting offices into essentially, let's call them hotel rooms and calling that an apartment. Well, a hotel room is not an apartment, it's a hotel room. But, these people were getting around the rules by creating these 10-meter square kind of cubby holes, saying, oh yeah, this is a studio. It's like, but it isn't. The normal studio is like 35 square meters. So I do feel there's going to be a lot of problems that come out of that.
What do you see for us as investors now? Where are the opportunities? What should we be looking for or looking at with this? I mean, because that's a huge shift you described. What should we be aiming for, do you think?
I think, again, it's a tough question to answer. I mean, the way I'm kind of approaching it is twofold. One, I'm looking at properties that are not performing as well as they could and looking to offload them because the market is good right now and it's quite hot. And I think you can make a good turn on your money if you've got a property you've held for a number of years that has appreciated in value. The second thing is, because no one really knows what's going to happen with currency, and I am concerned about the amount of money being printed through quantitative easing, I do feel there's a lot of inflationary pressures being put on the market that are literally being hidden from sight by muddying up the numbers. I mean, particularly in the UK, where we're faced with huge trade issues that are not being reported because it's all being pushed under the bridge, and we're talking about, oh, Prince Harry said this today, or someone else said this, or whatever, the media come up with. So I think that is an issue. And I think if there is a inflationary pressure on the currency, then to my mind, I don't really want to be getting involved in that. So I'm divesting, let's call it fiat money, into proper currency, such as gold and silver and crypto. Which are kind of outside of that inflationary pressure. But it's a tough one in terms of, from a strategic perspective, what should investors be doing? Because let's say there was a reset in terms of, from the perspective of currency, not other stuff that's being talked about, but in terms of currency, particularly if it kind of switched on to something that's gold backed, because you've now got the Chinese buying up a lot of stuff with a gold backed currency. Then that could have massive impacts on, the value of properties, which will probably sink enormously. Then at the same time, the value of, say, gold and silver would go up significantly too. So everything we do right now, I feel is a hedge. It's kind of like looking at how you can protect yourself and your wealth and just ride through the wave.
Question there with the inflation there. You say you think the property values would actually go down. You don't think they would go up as a result of the inflation?
It depends what kind of inflationary pressures we have, I feel. If they're going to carry on printing money until someone points out that money is worthless, such as Venezuela, then yeah, sure, property prices will go up and up and up. But if there's a kind of a hard stop and a movement onto a fixed standard, because obviously right now it's still on the US standard, then there could be. But all of this is, we look at it from the sidelines looking on. All we can do is make informed decisions based on looking at commentators and analysis and economic output, and just try and make a view as to how is it going to affect us and protect ourselves. We just don't know. But if that did happen, it's going to be happening soon. I feel, 18 months, 2 years max before something major like that happens. So I think, investors should be looking at that from the point of view of protecting themselves.
100% agreed. 100% agreed. I've actually started diversifying more now into cryptocurrencies as well, just to create that extra that extra hedge, because, well, if anything's going to go well with inflation, cryptocurrencies is positioned well to do it. So it's super exciting. So before we wrap up, what are you doing right now, Matthew? You said you are selling some underperforming properties. What else? What is your focus right now?
So I am at the moment on a quest to acquire businesses in the UK, predominantly in my kind of sector, so more like letting agencies. So I'm working with a group of people over here where we're looking at effectively the agglomeration model. So packaging up smaller firms into a larger operating unit. So that's early days, but the outlook on that's looking quite positive from the perspective of.
That's awesome. So you're going to be buying up a bunch of local letting agencies and then putting it together into a massive. Is it going to be a national firm, or is it going to be more just really strong in certain cities?
It's to my mind, I at the moment, because everything is so uncertain, are looking short to mid-term. So to my mind, it's about packaging up and then selling on to like a big player like Connells or someone like that, because it's really unclear as to what's going to happen or could happen. And I think until things are settled down, I would rather have cash that can be converted into real currency or crypto, as opposed to, oh, we're having a really good cash flow coming on, and then all of a sudden it's like, dump. Right, okay. So I feel, it's something that I've been thinking about for a couple of years, and I've got a lot of local letting agent contacts I've been chatting with, and we all kind of feel the same way in the sense of it helps from economies of scale. It helps from the perspective of the increased regulations that are on the letting sector. I think we're up to just over 100 pieces of legislation now. And, hats off to landlords that try and cope with all that on their own. Really, it is a nightmare. But thirdly, if you can take a piece of a pie that is a bigger piece of a bigger pie, because you've amalgamated it up, and then the multiples thus increase.
So that's how you do it. You're not just going in and buying them, you're actually bringing them all in as partners in kind of, so more than an acquisition strategy, it's a merger strategy.
Yeah, merger, agglomeration, it's mixed. Yeah, it's a mixture too. But yeah, that's kind of my focus at the moment. And then, the other thing I've been doing is improving my own HMOs as much as I physically can, just to keep the people that are in the properties and to keep the rents at a reasonable margin, which obviously takes time, money, and expense. And that was the other thing I kind of touched on earlier, is that contractors right now is such a nightmare getting hold of them. We have extremely reliable contractors that are literally busy all the time. And then we have fly-by-night contractors who will say one thing and do another thing and then not turn up. So that's been really interesting. And we have been actively recruiting, let's call them maintenance operatives. And that has been really interesting in terms of the skill sets, lack of skill sets of some of them. So I think one of the things that certainly I would encourage people to be doing if you are managing your own portfolio is trying to get hold of one good electrician, one good plumber, one good kind of general handyman, just so you have those people to work with and start giving them little jobs now. Because the contractors we have are saying, look, I'm not taking on any more clients because I'm so busy, I just don't want to. So we're quite lucky from that perspective that we've got good people we've been working with for a little while. And the other thing I've been doing as well, which we talked about previously, is doing some land wholesaling in the US, which again is more of just a cash strategy. It's about generating cash. That is slow. It has been slow. I think it's one of those things where you have to test a lot. I've spent a lot of money on testing direct mail, which is, as you know, quite expensive. But it's coming through slowly. But it's just really a cash grab. That's what that's about.
Very cool. Very cool. So if someone listening now wants to follow you, learn more, get a hold of you, how do we find you?
So best place to go, I'd say, is yourhmoexpert.com.
I'll add the link, by the way, guys, in the show notes. But your HMO expert, just one word.
Yeah, yourhmoexpert.com. I'll send you the proper URL anyhow. Yeah, that's probably the best link to go to. We're just in the process of, I'm literally in the process of just creating and finishing off a really nice, epic, lifetime membership kind of offer for people, which is insane. And, you and I both know the value of education. And I think that's actually one of the things I was going to kind of end with, actually, from the point of view of, if you're an investor right now and you don't have people to talk to, I would highly recommend that you get hold of someone or join a group where you can talk to people, such as Daniel's group or whoever, because the power of mentorship and coaching is so powerful. And I see so many people that they don't want to invest in themselves. They want to buy a £200,000 property, but they want to do it the wrong way, which just blows my mind every time people tell me about this. And they don't want to impress like a couple £100 a month or whatever it is to be part of a community of people where you can get actual questions answered to actual answers. And I'm not talking about Facebook groups. My opinion, there are good ones and there are bad ones, but it's very difficult to know who's on the end of that unless it's being led by, someone like yourselves or whatever. It's a tough one. So I would definitely recommend people do check those kind of things out if they are thinking about investing, because investing is a lonely game. It's difficult sometimes to speak to friends and family about it because they just don't get it. So if you've been part of a community, such as yourselves or, mine or whatever, I'd highly recommend people check that out.
Absolutely. So go to yourhmoexpert.com to check that out. I got some exciting news for you in a moment. Matthew, thank you so much for joining us today.
Thanks for having me on. I really appreciate it. It's always good to catch up.
Yeah, absolutely. Absolutely. And everyone listening, thank you so much for joining us. I got some exciting news here for you in a moment. So stay tuned. Thank you so much for listening to the Momentum Investing Podcast. What a journey we have ahead of us, right? As Matthew said, things are going to happen. It's going to be very interesting to follow. So we're going to keep coming out with the episodes like this where you get the news, kind of get these insights into what's going on and what actions you can take to make sure that your portfolio is safe and keeps growing even in these crazy times. So make sure you subscribe so you get those updates. And next week, we got a really, really fun episode. We actually have one of our mentorship students, or two of our mentorship students, I should say, Dennis and Philip, brothers in business and investing together. Their journey is nothing short of inspirational. It is an amazing journey where they started out investing on their own in stocks, losing lots and lots of money before getting themselves a mentor, starting to make incredible success in stocks and cryptocurrencies before setting up their own companies, selling COVID tests, and now totally smashing it in property, not just buying one block of flats, but actually buying two with a total of 6 flats between them. So an incredible journey done so fast, and wow, it's an inspiration to hear. So I hope you can listen to that episode. I can promise you'll get a lot of good lessons that you'll be able to implement no matter where you are now. Dennis and Philip shared some incredible insights that you'll be able to use. That episode is coming out in a week, Tuesday next week. So make sure you subscribe so that you get that update. And if you want to start your property journey, please go to momentumgift.com. That's momentumgift.com to join our free online course that helps you start your property journey and reach the success that you deserve.